All right, hey there. Good morning, everybody. Christopher Inks with Texas West Capital back here on Wednesday, the 11th of November, 2020, on a beautiful Wednesday morning, almost afternoon here, San Antonio, Texas. Great to have you all checking in. Sorry about Monday. Wasn't a whole lot I could do about. I still don't know what the heck happened in our area, but the power and the internet went out both. Power came back on. Internet was out forever. It seemed like. And of course, the internet company isn't divulging what happened. So, it is what it is. I appreciate you guys showing up today. As always, you can join us at howtotradetowin.com. Excuse me. We've got different tiers of service of membership there, guys, and you can choose what fits you. Work on with it. And we'd love to have you there. Again, guys, we've got over 30 hours of educational content. We've got a whole bunch more coming through the end of the year as well. I'm redoing the current, what do you call it? Just the general education about markets, starting from, the beginning to moving on, from everything from the very basics of how the market works and why it does, the way it does, the market psychology part of it, all the way up through risk management, except I'm adding more onto that. And then, we've got candlestick and price action patterns and how to read them properly, as well as, what else do we have in there? Pretty much everything. We've got indicators, how to use them properly, how to use them alone and together, to read with the charts there. And then it goes on into some basics of Wyckoff and basics of Elliott Wave as well. We've got that all coming up there. I've got some other stuff I'm putting together for y'all as we continue to go on as well. Plus, of course, if you're Tier 3, you get that weekly Tier 3 live stream on Wednesday. So that's today. So, those of you that are Tier 3, don't forget it'll be today at 4 p.m. Central Standard Time. That's in just under 5 hours. And they usually last about an hour or so. And you can ask questions in there and whatnot. But we usually keep it focused around some tip or technique or trick that you can use to make trading, shorter term trading easier at first while you're still learning, how the markets work and whatnot. Lots of different techniques there. Even if you haven't gotten up to what we've been doing it for just over 2 months now, I believe. So, if you wanted to join, you can join and you'll have access to all the previous ones we've done as well. So lots of stuff there. And then, of course, we also, last week we took questions. We've also looked at, another time we looked at how to identify a Elliott Wave triangle, correctly, and why it's superior to any other kind of triangle you think you may be seeing in the charts when you identify it, and how to figure out where your stop loss and your targets are and everything. So, again, just our way of kind of getting our newer traders, or even those that have been in a while, just don't know, some tips, tricks, and techniques to help you with your trading. So, anyway, that's there as well. Tons of stuff, though, guys. And I'll tell you what, if you don't think we pump out a lot of content, guys, talk to anybody that's in there, especially Tier 3. People in Tier 2 usually, at first, are kind of overwhelmed with just what we have for Tier 2 content. And then, of course, Tier 3 is a step up from that. But if you're in Tier 3, again, well over 30 hours of educational content, over 50 setups a week. You have over 20 assets that we do with daily and intraday updates across Forex, stocks, and commodities, and crypto as well. So lots of trading opportunities there, guys. Anyway, we'd love to have you there. Come join us. Who's here today so far? Guys, have to forgive me. My throat's a little off this morning. Silvio checking in from the South African vacation. Glad to have you checking in, my friend. Casper was checking in and then got called out. We'll see you Friday, buddy. Let me see here. Who else is? Spiral Architect. Good to see you. LG. 51 ETH is here as well. Tommy S is checking in back. Hey, good to see you checking back, bud. Crypto Mowgli. Hey there, buddy. I see you. By the way, I noticed you sent me a message. I've got it in there. I'll be responding to that as soon as I get a chance today. Sorry, I see it's taken a day or so to get back to you on that. LXT, Brian Riley, what's going on, Sir Hold? I see you there as well. Let's see, Corn 100K is here. Esteban's here. Devin, Greg, man, I love it. You guys all showing up. Nevlusian, Block Tech. Let's see here. Devin's looking for top of the supply structure at 17.2. for Bitcoin's move up. May not be too far off from that. Definitely a target if it continues up through the EQ area for sure. Hey there, Off Main. Joe the Butcher checking in. Aromat is here. Good morning, good morning. Brian Riley says, good content in Tier 3. Chris never sleeps. It seems like I don't, does it? Let's see. Last night I was getting those hot takes out. Guys, I think I finally hit the sack at about 3 a.m. this morning. And then was up, about 7 o'clock this morning. Getting ready for the day. So yeah, lots of content. Content. Pixafin, what's going on? And Aramis as well. Helder, good to see you guys. Lavo is here. I appreciate you, Crypto Mowgli, for sure. Definitely. Mechanic, good to see you checking up. And Eric, just looking? Well, hey, we've got some stuff to look at. Let's go ahead and jump in here, guys, see where we're at. So, if you're in Discord with us, we've had multiple potential counts, watching as prices moved, getting invalidated as things have gone up. And so this morning, we had this move above this swing high here. Now, there are still other possible things going on. This is my primary count at the moment, though. It gives us an A, a B, a C, a D, and an E here as the triangle. Now, based on the height of this triangle here, at the widest part for the swing low to the swing high, and placed there at the wave E termination point, that gives us a target up here of about 16,700. All right? Now, oh, excuse me, hiccups. As you can see, that gets you right around the EQ of this weekly supply structure here. At that 16,635 or so area. So just about that. So that's my initial target. Now, there is the possibility that this is ABC. So 4 is actually done here. And this is maybe, I don't know, maybe a 1, 2, 3, 4, 5 here. So that's a 1, 2. And this is wave 3 heading up a 5. That's a possibility. I think this is a stronger candidate for an ABC, though. So we'll see. But so right now, in either case, price is headed up. Again, looking up there toward that target. So that's kind of what we're looking at, guys. Not a whole lot else going on there as far as that goes. Now, the other big thing, of course, is something I've been keeping everybody alert of here, which is this. This is the Bitcoin inflow mean to spot exchanges. So this is the mean inflow over 7 days of Bitcoin coming into the spot exchanges. Remember, the idea of this metric here is that if people are sending Bitcoin to the spot exchanges, then they're looking to sell it for fiat, for cash, for whatever. Not for Bitcoin, that's got Bitcoin. They're not trading it. They're not looking to trade it for alts or anything like that. They're looking to cash out. And that's why we watch this. This is kind of the whale watcher type thing, I guess is what they kind of refer to it as. The idea here is that anytime this metric here gets above the 2.0, it's a rare occasion, even though we've had it a few times here recently. Historically, it's pretty rare. And when it does get to that point, it usually leads to a drop. So again, we had it right here back on the 10th. I warned you all about that. And then we had this $1,200 drop here or whatever that is. About $1,200 or so. Let me see. Oh, wait, no, I'm sorry. This was just from, what is this, about 15.4 and some change or something down to 15.1. So that was just the $300 drop there. So, yeah, but we did have it previously where it did drop that $1,200 or so coming from there. And so here we are, pushing up back above it again here. Doesn't mean it has to drop. It doesn't guarantee it. It just means that historically, that's usually most often by a long shot what happens. Many more times it does than it doesn't. But it also doesn't mean that it drops right away. Historically, we've shown areas where this has gotten really high here before it's actually come down. But again, the idea is that that mean is pushing up above that 2.0 area there, and which tells you that there's a lot more, it's heavy with Bitcoin coming in, which leads to usually a sell-off as you're doing it. So, again, probably closer to, actually, you know what? This isn't even, I need to refresh this. This isn't even updated here. Let me see. Let's go ahead and do this real quick. I just noticed that. We're sitting there right there at 15.3. Hadn't even gone up to what we had this morning here, so we'll have to let that load up there for a minute. Let me see here. Hank, what's going on, man? How is the bull life? You talking about bulls in Texas? Or are you talking about charts? Nobody's a bull. What are you talking about? Nobody's a bear? We trade the charts guy. Well, I guess, okay. I used to say it a lot, to kind of differentiate, but I'm a bull overall. I am a bull on Bitcoin overall. I just think there's possibility that we could have a pullback larger than most people want to accept right now prior to it going up. But again, as I've continued to say, that in no way guarantees that that's what's going to happen. All right? Let me see here. Let me throw this indicator on here. Moving average. Let's see. Moving average. Where are we? There we go. And that should be set to 144. All right. Oops. And then we'll set the style there to area. Go ahead and change that color back to what it is there. We'll make this one kind of disappear here. There we go. And then we'll bring this down. Gonna get over here. I'm messing something up here, aren't I? Let's see. It explains inflow mean. Not all exchanges. We want spot exchanges. We want block. Chart type line is fine. Let's see here. I'm going to have to check back on this. I think I messed this up. I don't want to spend all this time here doing this. Let's see. Get that back down there. Yeah, this shouldn't be well above 2 over here like that. Oh my gosh. What did I do wrong here? Anybody know? So you don't want all exchange, you want the spot. That's what you want. Well, nonetheless, it's looking up there, so we'll keep looking at it. I'll get this figured out. I haven't been using that a whole lot. I just started using that, so still trying to make sure that I get everything right there. I think I might have forgot a step in there. We'll check it. Let me catch up what you guys are saying here. Let me see here. Hey there, Baker. Good to see you, bud. My day is going well. Thank you. I hope yours is also. Bianca checking in, saying, what do you think will happen with the Bitcoin alt pairs if Bitcoin runs to 16.7? Will we see big drops or minor ones for those who hold well? Good question. Well, if Bitcoin's running up, here's the thing. If this is the end of this push, they probably won't act the same as they would act, earlier in a push. So earlier, if this is a top here, this last bid here, then those Bitcoin pairs likely are going to not act the same as they would, say, on a push down here or something, where it isn't at the end. Because remember, when you get to the end of an advance or the end of a decline, there's a transition period. I think traders think way too simply about that. They think, oh my gosh, it's at the end. That's it. They think it's, this sharp change, right? And the one thing I've been trying to do for so long is explain to people that when you on the larger time frames, when you're changing from when you're topping out in an advance or bottoming out in a decline, there's a transition period. And that's why you have those areas of distribution, areas of accumulation. It takes a lot of rotation in trades there to work everybody out so that price can ultimately continue lower there. And I think that's one of the issues that a lot of new traders are getting caught up in with the DXY right now. Because they're like, oh, look, Bitcoin isn't tracking, isn't correlated to the SXP now or the SPY. oh, look, it's it's not correlated to the dollar. And what they're looking for is a move for move correlation, and that doesn't usually happen. Not when you've got a rotation going on, where things are going sideways, which is what's going on with the dollar right now. Remember, this is the dollar right now, guys. We have been going sideways. I mean, really, since back over here in July into August, we've been doing this sideways right here. Most of that time has been spent. Let's see if we can get my box here. Has been spent right in this area. All right? So, I mean, we're moving sideways here. So you're not going to get every time the DXY goes up, Bitcoin goes down and stocks go down or something like that. Sometimes they'll happen at the same times. Other times they'll tend to look different. It'll go opposite because you've got a transition going on here. Even if again, I'm looking at this as potentially we've got a little bit lower low down here still to go. But even if this is the bottom here, this is still transitioning, which is why you have all this sideways. So, don't think a whole lot when people start talking about correlations online. It's, guys, you know what? As a matter of fact, you shouldn't worry a whole lot about what people say online. Most traders, that you've got on social media. Again, most of them are just biased toward one way or the other. And, that's going to draw you. If you, again, as retail traders, you're often looking for price to move up, right? You need it to move up, right? You get in, you don't know what you're doing. Price needs to move up so you're not worried, right? And so what that tends to lead you to do is to find people online who support your emotional bias. So if you're looking for price to rise higher, you tend to gravitate toward people who constantly tell you, oh, price is going higher, price is going higher, price is going higher. And as I've often said, what's worse than being wrong? Being wrong is not the worst thing that can happen to you guys. Being right for the wrong reason is something, especially if you're new, that is one of the greatest pitfalls of traders. Because when you first come in and you don't know what you're doing and things seem to work out, you are convinced that you do know what you're doing. You're not being realistic. And you go, oh, but I'm different. Oh, trading's not that hard. Everybody thinks that when price is moving up. Everybody thinks that when price is moving. I don't even want to say a bull market. Just when price is advancing. Everybody believes they know what they're doing. Everybody believes that everything's right. Or that, that they're all right. That they can't possibly be wrong doing something they've never done before without an idea of what's really going on. And so you got to be careful with that out there. So what's going to happen with Bitcoin pairs? I found more than a few. We did hot takes last night for tier 3. I found quite a few that actually are looking pretty good for some further upside here, quite potentially. So I don't know that they're necessarily going to get hammered or anything. We'll have to see. Again, they tend to do differently there when you're getting toward the top, when you're getting into that rotational aspect, than what they would do further down. So if you would normally expect them to decline, when Bitcoin makes that move up, it doesn't happen as much there. There's some that are going to be hit hard. Man, I was looking at that. Some of those alts look absolutely horrendous. They look like they just can't seem to get a floor under them. And a lot of those are with the USD or the USDT pairs. Again, looking through them last night, it seemed like the BTC pairs were looking a lot better setups right now in general. But you're always going to have those that don't and those that do, guys. So yeah. Let's see. You're going to take the time this month to go through every piece of educational content I've shared on TWC over and over again. It feels like being back in school. Yeah, well, here's the thing, guys. I share a lot of information. I share a lot of different styles and a lot of different tips and techniques. And the reason I do that is because I've been doing this a really long time. So I've come across all these, and I've maybe used them a time or two myself in the past. But the reality of the thing is, at the end of the day, the one thing I keep trying to get across to you guys is that as traders, The things that make you who you are as a trader or investor are not the things that make me who I am. They're not the things that make the guy next to you or the gal next to you what they are. And you absolutely have to figure it out. A lot of our members still are not taking that step and figuring out who they are as traders or investors yet. And if you don't do that, you're going to remain very emotional in your trading. You have to figure out who you are. You have to figure out, okay, be honest with yourself. What is your current financial and wealth situation? Where are you at financially and wealth-wise? That's step one. Figure out where do you want to go financially and wealth-wise. So where, finances and, financials and your wealth are, two different things. You can think of it as income and then what you're worth, okay? And so you want to see, where do you want to have goals? Where do you want to progress from where you are financially and wealth-wise? And not only where do you want to advance overall, that's your long term, but where do you want to advance in the near and the midterm as well? Okay? That's step two. So you have to figure out, where do you stand and where are you looking to go? Then you have to figure out, okay, well, be honest with yourself. How risk adverse or risk tolerant are you? Guys, I keep telling you, be honest with yourself, because you can attempt to lie to yourself, but if you do, it's going to give you results that aren't true. And so you're going to continue, you're going to be like, well, why isn't this working? Well, because you aren't working. You aren't doing the things that you needed to do truthfully and honestly to begin with. So you got to figure out, okay, am I okay with a lot of risk? Am I really not so risk, worth taking risk? I'm pretty risk adverse myself. You guys might know that. I've said that many times before. I don't jump. A lot of times people ask me, oh, what do you think about this? And I'll be more conservative about it because in my view, often as new traders, you look at the, oh, well, where is it going to go if it goes right? And you kind of tend to shove off, well, if it goes wrong, what could happen? And I tend to be the other way. I tend to be more concerned with protecting what I have than making $1 million overnight kind of thing. I'm just at that point in what I do that's what it is. But a lot of time new traders are the other way around. They're like, everything's, it's emotional. Everything centers around how rich can I get? How fast can I get there? And I keep telling you guys, if that's what you're thinking, you're likely not going to get where you want to get. You're going to lose a lot more money. So you got to figure out all that, your risk. Are you really risk tolerant or more risk adverse? And then you got to figure, okay, well, when can I trade? What time frames can I trade? If you're working a job, you can't sit in front of your charts 24/7. Don't lie to yourself and say, oh, I can pick it up while I'm doing something, walking down the hall at work or something, and I can make a trade. No. Don't do that. Because you're going to get caught thinking that you can trade more often than you can. And then you're going to get caught in situations where you couldn't get out of trades or get into trades like you had planned because you had work or family commitments or whatnot. All right? So like I said, then you have to figure out how much time do you have to trade? And not only how much time do you have, but then you have to figure out of how much time you trade, how much time do you want to trade? I talk to many traders who might have 5 hours a day that they could trade, but they don't. They don't want to. They want to trade maybe an hour a day or maybe a couple hours every few days. Because that'll determine, whether you should be looking for larger time frames or shorter time frames. All this is very important, guys. If you don't do this groundwork first, you're going to continue to have difficulty trading successfully and consistently. You're going to find that you're still emotional because you don't know who you are as a trader or investor. And that means you're going to pop around. You're going to do some longer term trades here, some shorter term trades there, and you're going to jump in and out. And guys, I keep telling you, if you want to be a successful trader, the key to success as a trader is consistency. Consistency. It's not getting the absolute highest price and the absolute lowest price every time. It's consistently applying the same thing over and over again in a profitable manner. It's not doing everything you can. So I say all this because, like I said, I go back there and I teach a lot of different ways to trade, a lot of different ways to look at the market. And I show you here because, again, there's lots of different ways to look at it. And not all of y'all are going to be interested in one way or the other. Or some things are going to make more sense than others. And the goal for you as a trader investor is to figure out what resonates with you. You don't have to do everything. Figure out what makes sense to you and then do it. The second key to trading successfully is picking something and doing it over and over and over and over and over again. You don't try it for a day and a half, a week, a month, and then get rid of it. Trading comes from, there are lots of successful ways to trade, but your biggest, the thing that'll make sure that you can trade successfully is picking the one thing and sticking with it. Whether that's Elliott Wave, whether that's Wyckoff, whether that's supply and demand structures, whether that's pivots, whether that's VPVR over here, whether that's market profile or order flow trading, whether it's patterns or classical patterns, whatever it is, you pick something and you stick with it. Don't make it more complicated than it is, than it has to be. Trading does not have to be complicated. Again, guys, I show you a lot of things when I'm doing it because there's a lot of y'all out there, and I don't want you thinking. Everybody makes you convinced that, oh, this is the way you have to do it and this is the way you make money, and that's so much BS. You can make money with Elliott Wave. You can make money with Wyckoff. You can make money with pivots. You can make money with volume profiles. I mean, you can make money with all of that just as successfully as each other. You just have to figure out which one works best for you. And then after you do all this stuff, then you have to really get down risk management. If you do those two things, you're already going to have a lot greater chance of being successful as a trader. If you don't do those two things, you're going to be battling uphill the entire time, and the odds are significantly against you that you will succeed. All right? This is the truth. See, this is the thing that people don't tell you because most people don't know this. Again, if you go to whoever you're talking to, notice they're going to try to convince you that however they trade is the de facto way that you should be trading and is the only way to make money, or it is the best way to make money. And that is such a bunch of nonsense. For the same reason that not everybody learns in school at the same rate or via the same way. Some learn better visually, some learn better auditorially, some learn better by doing. It's the same thing with trading, guys. Not every way is going to be equally successful for every person. I'm exposing you to a variety of ways, especially in Discord, of doing these things. So that way you can say, okay, juggle around, maybe try a little bit, figure out where you're comfortable with, and go from there. Don't make trading difficult. It's not. It's really not, guys. So don't make it that way. Don't use 50 different things. Don't use 300 different, indicators or whatever. Pick some that work for you and then use them consistently so you can get used to them and see how they work. I'm telling you right now, guys, that's going to go a lot further to making you successful than not. All right? Let me see here. Man, y'all over here, y'all are just going off over here. Let me see if I can catch up with you guys. Let me see here. Devon's mentioned that the fear greed was at 90 yesterday. A drop may be near. Yeah, so there's another thing you can look at. That's pretty high. I remember not too long back, a year ago, 2 years ago, when we were looking at fear and greed constantly being closer to around 20 or 30, right? And here we are at 90. So definitely something to kind of pay attention to. Sentiment there. Let me see here. Hank says it's always about the rodeos. I think you're talking about the bull. I got to get one just to put out the pasture and, just to have it out there. That way you guys maybe believe I'm really a bull. Contrary to what you may be thinking because of my comments or whatnot. Christian, what's going on, man? Says, looks like the only consensus is that the next move up is the last one before a major correction. Well, yeah, I still see a lot out there, though, who are talking about further up, 20 plus thousand. Maybe, maybe not. But, it seems like things are suggesting that we're getting much closer to a top than not right now. So we'll see where we continue to go. I mean, it's crazy to think about. We're almost at 16,000 again. It's been forever and a day, right? Now, honestly, the other thought is, I shared an article on Twitter not too long ago, recently here the other day, that mentioned that Bitcoin holders, the number of addresses of Bitcoin holders, there's the greatest percentage of them ever, I guess, that's been in profit. I guess prior to the beginning, when everybody that had it from the beginning were in profit, right? But anyway, it's the idea that so many of them are in profit. Now, the one thing you do have to be careful with is with people in profit like that, and we know a lot of them are from more recently, not from way back, so they're not long-time holders. Are they going to, lock in those profits? And that's a very real consideration, especially if the other markets continue to tank. I mean, think about it. If you're somebody, don't think about you and your wishes and hopes and dreams that Bitcoin goes to 100,000. Think of being that other person who just entered, within the last few $1,000s and is in profit now and feeling pretty good, but scared because the other markets are tanking, the dollar's strengthening, they're, at least locally right now, new shutdowns are starting to loom, starting to kick in across the world, with the pandemic and everything, with COVID. And so they get scared, so they're worried that Bitcoin's going to fall and fall down, so they go to lock in. Don't think for a second that isn't a very real possibility. It is. I think people tend to go, oh no, everybody's thinking about 100,000. Everybody's going to ride it up till... No, everybody didn't ride it up there at 20,000. Everybody didn't ride it up there at the June high of, whatever it was there, 13,000 or whatever, 14,000. That isn't the way it works, guys. Most of the time people are going to, either lose their money or they're going to cash out early because they want to try and lock in those gains that they have. It's very rare in general that a human being holds on for a significant period of time. And so, that's something to consider coming up here for sure. Let's see here. Big drop in blood on the streets, Sylvia? Is that what you're looking for? Maybe. We'll see. Let's see here. Pixifin said, you once said that the chances for that bigger pullback are 80% by a model you use. Is that still standing? Yeah, I haven't looked at it recently, but it should be even more at this point because we're getting closer to that point where we would expect that reversal. So yeah, we'll see. I've got to run that again here as soon as I get a chance, for sure. Let me see here. Hank says, tops are a process and bottoms are an event. No. No, tops and bottoms are processes. Your absolute highs and your absolute lows are events. And that's the thing, most new traders, they say, oh, the high, and they talk about the absolute highest point that a price reached, or they talk about a low and they think the absolute low the price reached. Rather, those are just events. The accumulation that happens at the bottom or the distribution that happens at the top, that's actually your top and your bottom. The lowest and highest points are just events that happen. So yeah. Let me see here. Hey there, Alec Tro. Good to see you joining in, buddy. Let me see here. Hop? Is that what it is? I'm sorry. I've got really bad eyes, guys. It seems like getting worse the older I get, man. And this is weird for me because I've never had an issue with my eyesight my entire life. It's always been perfect eyesight. So I'm struggling with this right now. Dealing with it emotionally, having eyesight issues. So hey there, Hop. It says, I've got a short on Bitcoin. Keep averaging it up. I'm pretty underwater on my short now. Should I average it again? 26,000. I'm in the red right now. Well, I can't tell you what you should do personally. Again, U.S. laws, U.S. security laws, unless you're a registered investment advisor, an RIA, securities laws here in the U.S. Preclude you legally from, or preclude someone from legally giving advice, specific advice to somebody. So yeah, unfortunately, I can't really tell you what you should do personally. Yeah, again, I don't know, and even if I could, again, I don't know where you got in or how heavy you are and where you're in and whatnot. One possibility for traders that are maybe concerned about that, like they want to keep their short, but they're concerned that it's going to keep rising higher, is to take partial losses as it rises. And so that way, you're just instead of taking full losses as it's moved up, you just take partial losses along the way. But again, when you're dollar cost averaging into a loser, you really kind of set yourself up. And what I mean by loser is just a losing trade. You really, unless you're really well heeled, unless you've got a strong bank account, it becomes most likely that you're going to end up either closing out yourself at a huge loss or you'll get liquidated. I don't ever suggest anybody ever dollar cost average into a losing trade that they've got going on. It's better just to cut your losses and kind of look for a new entry. But this is also the importance of understanding when you first get into a trade, where is your validation and invalidation levels? If it goes past a certain point, there should be a point. Whenever you enter a trade, guys, there should always be a point where you look at it and go, okay, at that point, I'm definitely the wrong way in this trade, or I'm most likely the wrong way in this trade. And you should always pay attention to that. If you're just getting into a trade and you're not paying attention, you find yourself in this situation where you're driven by emotions, and you might continue to do something like this, unfortunately, where you continue to dollar cost average into that losing trade. Again, there are techniques, with taking partial losses and offsets and whatnot. But man, they really become difficult there. Another thing that you could do, if you've got any idea how to do it, is using options or some kind of futures as a hedge at this point, since you're already at that loss in there. But again, that depends on, what your financial situation is like. Because your goal at this point, when you're really, depending on, again, what your situation is monetarily, financially and wealth-wise, if you're in a significant losing position, the first goal should be to get out of that position. And so if you've got, again, the ability to do it, if you understand how to use options or futures, you can still get into them right now and at the very least minimize those losses, because you can then ride the upside to that and at least limit what you've got on those losses. At this way, fend off the overall negative portfolio bleed that you've got going on. Because think of it, if you're already in a loss up to whatever point right now, and you were to go long and price was to continue going up, and you were to go long, say on futures or an option or something, the difference, again, from that point where you entered long on that option or that futures, that's all profit as it moves up. And yes, you're still taking a loss on your other position, which hopefully is just spot at that point, because, if it's leveraged, then you got to worry about liquidations. But if you don't have to worry about liquidations, I guess you still would if it's a short, because even shorting, just shorting itself is still basically one-to-one leverage there. As long as your liquidation is okay, as long as you're not going to get liquidated, then as price continues to move up, you're going to continue to gain, to take on more losses. But with your hedge, with your option or your futures that you've got in there, you're offsetting that with the profit that you're making on that. You would just have to make sure that your position that you've got that's in a loss is able to withstand that movement up. Again, without getting liquidated or whatever. That, for people in a situation like that, I think in general, but you've got to know what you're doing as far as options or futures go. But if you know what you're doing with them, I think that's probably the best scenario out of that. But, the first thing is not to get in that position to begin with. Sometimes, as traders, often more than we like to accept, we have to go through bad choices like this, to really learn those lessons that we need to learn to be successful traders. Again, I've been through my series of really bad losses through the years myself. So I definitely understand that. And there's no bigger, if you're listening and learning, there's no better teacher than experience. But, experience comes with actually going through that loss, and that sucks. It's hard. So that's kind of the way I would look at it there. Let's see here. Oh, Bianca, great. Would love to have you coming back, of course. Says highly recommended TWC to anyone who wants to learn and grow. I appreciate that. Thank you. Thank you. Let me see here. Helder, what's up, man? He says, do you have or recommend instructions on how to analyze volume profile charts, order flows? I look at them, but don't know if I'm getting the correct assumptions. Those are two of the things I'm working on right now. That we'll be releasing at some point here in the not too distant future. We're going to do market profile, and then we'll release order flow education. So yeah, that is something we're working on. I don't have anything right at the moment that I could just give to you, but it is something that I am currently working on putting together to record and release for you guys over in Discord. Let me see here. Brian says this feels like it will have a blow off top around 17K and then hit 13.8. Yeah, definitely possible. Again, initial target is the EQ here. Secondary target's going to be this 16,891. And then third target's going to be up here around 17.2. And then I've even got a fourth target up here. If it continues to go up here, it's 17,950. If it does. I'm not saying it's going to go to each of these higher ones, but if it continues through these targets, then those next targets are what we've said there as it continues going up there. Oh, forgot to mention, guys. Forgot to mention here. I haven't looked at the CME in a while, the charts here, but guess what? All right. So, overall, we've definitely got a wedge forming here. If price continues going higher, the wedge is going to change a little bit, but nonetheless, we have a wedge. It would have to get above, kind of like this here to kind of get up there, to get out of a wedge, an ascending wedge. So, I think we're probably closer to a top than not. But that isn't the most important thing here right now. The most important thing I want to really point out here, 3-day TD sequential. We just printed a TD9 there right below that R2 resistance on the 3-day. Now, this candle that we're on right here just started today. So it's got, 3 days to go until it closes. But, keep in mind, there is a 9 on a TD9 here on the 3-day. On the CME, and we are topped out in Stochastic RSI here. Also, we've got this bearish divergence here on the 3-day from back on that June 2019 swing high there. We've got lower highs, we've got higher highs with price, so bearish divergence right now. This would have to close above 82.97 up here on the 3-day to invalidate the bearish divergence. So it could happen, but that is definitely what it has, what has to happen there. Overall, of course, you've got the same thing going on the 1-day with that. Weekly has a much clearer bearish divergence, much larger here as well. The weekly would need to close above 85.66 on RSI to invalidate the bearish divergence on the weekly here. Much higher highs, much lower highs right there. Of course, weekly Stochastic RSI is topped out as well. What I am noticing right here is that your weekly OBV here is dropping off. It's been dropping off since May 4th. And so that was this one over here. And so what they're saying is, your smart money's been selling into retail at these peaks here. So you're getting lower highs and lower lows. This is clear negative divergence here. Now, it is the weekly, so that's why, it can still continue going up here for months because the weekly is a larger time frame, right? There's only 4 weekly candles in a month. So really, we're just looking at, 12 candles? Well, okay, maybe not. May, June, July, August, September, October, maybe 24 candles or so. It would be like looking at the daily on a monthly basis. And seeing that kind of thing. So, you may go, oh my gosh, they've been doing, it's been doing that negative divergence since the beginning of May. That's such a long time. But keep it in reference to the actual time frame that you're looking here. This is the weekly. So again, the idea is that OBV has been selling off into these highs here. Negative divergence as prices pushed up. And again, the most relevant OBV is the daily, but you still should be watching the other time frames as well. So, it is a pretty big divergence there. We'll see if that, again, I expect that to play out. But, how soon is that going to play out? We'll find out. If we're looking at the weekly swing high here on the CME, that's the last one was this first week of January. That swing high was up there at 16,845. So that was the last one there. Getting above that, then the only candle you have left on the weekly was that that's higher, was their first week of business there, the week of December 18, 2017. But that's, CME there. Big picture ideas, if you want to look at some big picture stuff, you can look at this right here. So you've got this ascending channel kind of thing going on. As you can see, the EQ works really well here. Support, resistance. You got the gap there. You got support over here. So, you can see this continue up toward the top there, which gets it near the all-time high. Locally, again, if you want to look at channels, you can look at something like this here. So that gives you kind of this this bigger channel right here. And again, that's still possibly as well that this right here that we're looking at, this, I'll pull that back over there. This possible wedge that may be building here. By the way, you'll notice right here on this ascending local channel, notice that the last week's candle got rejected at the EQ of that ascending channel there. So, again, if it can't advance through that, we should be expecting a move down to the bottom of the channel. If we drop out of that channel, again, we'd be looking for a target of, through that support there of about 47.90 below the point of breakdown. So it's kind of getting you back down here around the low eights, this high volume node here, the pivot on the weekly, where you'd be looking to break down from, if it breaks down from this support here. So that's just, bigger picture stuff as we're looking on there. Let's see. Joe Butcher says, learn them all, everything I'm teaching, I guess he's saying. Do I think it will drop soon? Hop is asking, even if I could get out at a small loss, would be okay. It's way too big now at $26,000 underwater. See, and that right there is, unfortunately, that's what we get ourselves into when we trade emotionally, because then we get to the point where, oh my gosh, it's too big of a loss now to take. I mean, it's going to reverse at some point. We know that. Again, depending on your situation, though, how far can you withstand? Because it could. It could head all the way up toward, the all-time high there before it actually gets a reversal going on. We do our best guesses based on what's going on at the moment, but there are no guarantees with that. As far as is it going to or not. Let's see here. If we zoom out here, again, I'm looking for a minimum up here, probably around the 16.6 to, 17.2 kind of area. If it gets through that, up toward that, really is the more likely area before we get a pullback. But even then, I've seen counts that give this just a 3, and then we'll have a 4 pullback and then a 5 up. So depending on where you entered, the 4 pullback might be enough. Let me zoom out here a bit. I've got this count, which gives it potentially, working on wave 5 here, the end of the end, and then you have your entire one up and down. But as I said, there are other counts out there that give this basically a 1, 2 here, and then a 1, 2, 3, 4, 5 is what it'll be. And so depending on where that pulls back, if we get down here, we'll say around that swing low, and let's say it gets up here to just to the EQ there, a usual wave 4 would then pull back around 13,659. Though, wave 4 can pull back 50%. So potentially 12,733. Usually it's at 38.2 though. If this is the count though, if this is 5 up, then there should be a minimum pullback generally. You know, we generally look for wave 2 to pull back around at least 61.8, which is right there around 87.34, though it could go to 78.6, you know, or lower. But, you know, again, you're just doing a lot of guessing right now until we actually see that move coming down. So, I mean, I think if you're in that position right now and you're looking at what to do, I think you just kind of look at this and assume first that this is a 1-2 and this is maybe a 1-2. You know, 3, 4, and a 5 maybe coming up. So, you know, just a limited few $1,000 pullback before it heads higher. But again, depending on where you've averaged in, that bit of a pullback, even for a few $1,000s, might be enough for you to unload some positions, which gives your further down positions more room to run if you choose to let them continue higher with, you know, looking for the ultimate, you know, the wave 1 done and pullback for a larger wave 2 correction. But remember, even though wave 2, we usually look for that 61.8 at least, it doesn't have to. Wave 2 can just pull back 38.2. So that, you know, there are no guarantees in trading. Absolutely none at all. And so we have to continue to be really careful about what we're looking at as far as that goes. And right here, we've got this ascending wedge right here. And if we zoom into where price is, I'm going to have to get going in a second here. Price is more or less finding support right about that level at the moment. So yeah, you know, I think those are things you're going to have to think about on your doing. Like I said, if you know how to do options or, you know, futures, and you're worried about it continuing higher, you know, you can long that as a hedge against what you're shorting here. But your position that you're shorting would still have to be able to withstand any further movement up without getting liquidated. But as long as you can do that, you know, you can at least stop overall the bleeding right here as it gets up to the top, and then you get out of that futures position. Now you've made that profit, and so now, you know, you have the loss, you know, as price continues to rise there. So now as price continues to drop down, that spot position you're in or whatever you're in there, you know, is going to lessen, and you've still got that profit from the top. And so what that allows you to do is that profit allows you to get out at a loss on your current underwater position, but still break even overall, you know, as long as you don't get out below how much you made on your hedge there. Let me see here. Fellow Cone shows how he was shorting and averaging up. I copied him. Don't copy. Please don't. Guys, you shouldn't be copying anybody that you see out here, not myself, not anybody else, especially when you're talking about averaging strategies, especially if you're averaging a loss. Again, guys, even if you follow people online that may end up being decent traders, the reality is you are not them, and they're not trading your money. And there's a lot of things that could be going on with that. And even if you do everything exactly as they do it, you not being them and not having their experience and whatnot means that you likely will not do it exactly like them. You know, you'll get emotional and you'll pull an order or you'll add an order where you shouldn't. This is why, you know, again, with TWC, we preach so much about learning. It's all about helping you become a trader rather than somebody who copies somebody else, because there's too many things that are different between you and them. You know, people, you know, often, you know, are wanting to do what I'm doing, but what I do is geared toward me. All those things I talked about, what makes you a trader, you know, and all those things, an investor, that is my style of trading, that's built around that and the time I have and all this, which is different from everybody else out there. So just because I think a short or a long may be good in some position doesn't mean it's the best thing for you, whoever you are out there as traders and investors. Because your circumstances, your situation, the things that make you who you are as a trader or investor are going to be different than those things that make me who I am. We can talk about general levels of areas of support and resistance like we do, but the goal as a trader is to figure out how do you incorporate that into what you are as a, you know, who you are as a trader investor to best utilize that information to make the trades that make the best sense for you at the time. But that's what a lot of people aren't going to tell you online, because a lot of people just want you to come in there. They don't worry that people don't stick with them. They're worried, their churn is high. People come in, they try to trade off their signals. They lose because they don't know what they're doing anyway. And they leave. And then new people come in. And they lose. They leave. New people come in. So the churn rate's high. But they don't care because new people keep coming in, because all people are seeing is, oh, they're going to tell me where to buy and sell. Now, we provide setups. We do that. But the goal is still to get you more to understand why I'm looking at the setup that way and what these things mean, as well as giving you, education on how to trade. So that way you can look at them and go, okay, well, how do I trade this for me myself? That's the goal. That's where we're trying to get you at. Because we know that if all you're looking for is for singles, you're going to lose money at the end of the day. That's it. And nobody out there is going to tell you that. At least not anybody I've found yet. That should tell you something. So I think that's a reason why, again, most of our members end up staying with us for an extended period of time, 6+ months. Because we don't, again, we're all about them developing themselves as traders, not about trying to just tell them where to buy or sell. So that way, however long they are or aren't with us, they leave with more experience and more education than when they came in. So they're better equipped to trade. Yeah. Anyway, guys, I'm sorry. I missed a whole bunch of your comments here, but I got to get out of here. It's after 12. Real quick here. Jose, what's going on? He says, when looking at the Bitcoin CME chart, would it not be as significant considering this rally from the lows has been mostly spot driven? Would it not be as significant? No, it's always significant. It's always significant. A lot of people who don't trade, don't trade the markets, don't know about the CME, really know about it. That's often, what they'll suggest. But no, it's always relevant. Because the CME is where the liquidity is. And where, big traders either hedge or really just play the derivative side of it. So yeah, it's definitely worth watching. I would never not watch it. Sure. I can see what you're saying, definitely. And you have to keep it in mind, as you look at it, but the CME is always significant. Yeah. Hank saying if you draw fibs from the all-time high to the 2018 low, we're at the 78.6 right now. Hey, that's a nice wave too, isn't it? 78.6 retracement. I know y'all hate that, right? Yeah. So, but anyway, okay, guys. Let me get out of here. I've got to get out of here. So, sorry about that, guys. Not getting to everybody's questions. Hopefully, I've made a lot of sense here for you today. Maybe helped you, work your way through a lot of things that are often said, in social media, but that aren't necessarily true. Again, guys, even if you're not joining us, I understand it is what it is. But that's why we do the live streams here a few times a week. And, my goal is even in that hopefully, we're giving you some information. That we're, giving you things that you can use. Because, with the internet, the reality is you guys have all this information out there. And a lot of it's free, which is great. The problem is you don't know what you don't know. And there's a lot of free information, but most of that information is either completely wrong or it's wrong. It's based on some truths, but overall is wrong. And as traders, as new traders, you don't know that. You don't know what you don't know. So, I try to put my, quarter of a century of experience here, not to tell you what's definitely going to happen with the markets or anything. I can give you my opinion and things I'm watching and why, but the goal is to impart some of that knowledge on you so that you don't have to take some of the losses that I took getting to where I'm at right now. So hopefully that comes across when we're doing this. So anyway, there you go, guys. Listen, I hope you guys have a great day. Remember, I'm telling you guys, no matter how good it looks on the chart, no matter how emotionally bullish or whatever you are, or even emotionally bearish you are, whatever, there are no guarantees, guys. There is no guarantees. This is speculation. The definition of speculation says that risk is involved. And if there's risk involved, that means there is no guarantee, right? If there's guaranteed, it wouldn't be risky. So there are no guarantees. So the only thing you control the market is how much you lose. I keep telling you guys, risk management is the most important thing you'll ever learn and do on a daily basis as a trader. It is where you make your money. I hope that's coming across to you guys, all right? Y'all take care. Hopefully we'll see some of y'all joining us over there at howtotradetowin.com. We would absolutely love to have you there. But even if not, please join us back on Friday at 11 a.m. Central Standard Time. We'll do a bigger show then. We kind of look at gold and oil and other things, the stock market as well, take some requests. So it usually lasts a bit longer, about 2 hours. But we hit a lot of things on that end of the week there. So be sure to join us then, all right? I'm out of here. Thank you so much for joining in, guys. Take care. And you know what? If you get a chance, be nice to someone else. But more importantly, be nice to yourself. Give yourself a little break, Don't be so hard on yourself. We all make mistakes. The question is, do we learn from them? If you're learning from them, you're doing good. You're at least moving forward, okay? Y'all take care. Have a great day. We'll see you later.